Once you have that foothold, right? Then you have to make that decision. Do you want to stay there and just do the average, but you cannot have uncommon results doing common things. People ask me all the time, like, well, don't most people do this, whatever this is? And I'm like, yeah. Do you want what most people have? Because if you want what most people have, we'll totally do this. And as long as you're not going to be mad at me 20 years ago for you not having this.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Freddie Rappina. Freddie is a financial advisor and a chartered financial consultant, as well as an accredited investment fiduciary. He founded Opta Financial and helps clients examine their current financial situation, goals, and completes a financial analysis for them. So I'll stop there, Freddie, because I want to let you tell your story. But thank you so much for coming on the show today. Thank you for taking the time out and joining me.
Thank you, Jason. Thank you for having me.
Can you tell us about yourself? Tell us your background a little bit, sort of deeper than what I just read.
Sure, yeah. Instead of the boring bio stuff, I am I'm a wealth advisor. I am a retired police officer, and really got into wealth advising probably around 2012, 14. And the reason why I got into it is I really wanted to change people's perception on how to build wealth. And you know my the things I talk about sometimes are a little bit different, a lot different than what you would normally hear from a you know stereotypical financial planner type. Um, so you know, I just wanted the world to understand that there are two different games being played in finance, and I've likened it to checkers and chess, and that's why I wrote the book, "Playing the Wealth Game," which just came out, and it's a top new release in Amazon.
Nice.
And it's a an idea that people just being oversold concepts to, especially the middle class, and thinking that they're going to be able to become wealthy with doing these concepts, and it's not it's not the case. If people want to become wealthy, they're going to have to do different things. And that's akin that to chess. I don't say there's anything wrong with checkers though. If you're a checkers player, I want you to be a good checkers player. Nothing sucks more than being a bad checkers player in a capitalistic society. But just understand that you will not become wealthy. You can have a nice life. You could be happy playing checkers, but you're not going to become wealthy. To become wealthy, you go over to chess, which has totally different strategies.
Yeah, for sure. There's a lot more of, I guess, intellect involved in chess than you would think from a checkers player. Although maybe for some, I don't know. For me, checkers is a very basic concept that I think I could play with my kids. But chess is people who are good at chess is a whole different ball game. Um, you mentioned that you're a retired police officer, and I think it's always interesting to me when people come from maybe a background that you wouldn't necessarily associate with, being a wealth advisor or anything like that, for no other reason than that's just what my what stereotypically you don't think of police officers as being in that space. So what what changed your mind? What kind of moved you over from police officer to financial advisor and wealth advisory?
Well, I once I started being around wealthy people and started to really learn, like, okay, there is a way to become wealthy in the United States, and you didn't have to start out with $1 billion in order to do that. I enjoyed my time being a police officer, but and I did my 20 years, and and but I really way more passionate about helping people become wealthy and helping people achieve their financial goals. Um, but yeah, I mean, I know it's a different career, but you know, I have there are some elements that are similar. Having an evidence based mindset, right? So I am not, you know, as interested in what people say and how do they feet move? What are they doing? Right? It's so when you look at um, the financial world, you realize that um, that there are people, not everybody's really playing the same game, right? And if you want to do those things, you have to do what those people do. So, and like things, simple things like compound interest, right? I, you know, I believe compound interest is the most oversold concept to the middle class. Just completely oversold. Not that it's wrong. Okay, it's not wrong. It's oversold. Okay, because humans just don't live long enough for compound interest to work the way people want it to work. Not that it's wrong, it's bad, it's math. It's not, it's irrefutable. But how people expect it to work is an unrealistic expectation because people just don't live long enough. If you lived 900 years like Yoda lived, compound interest would be great. By your 400th year, you'd be super duper rich. Okay. But in this lifetime, where you only have so many sets of 10 for for your money to double, if you have like a 7% interest rate or something like that, there's just not enough sets of 10, especially if you want to have that kind of income during a time of your life where you're physically able to enjoy it, right? So just simple things like that. But the companies, all the financial companies, like not all, but you know, a greater majority of them are like they have this preach of save money, save money, save money, and then they turn around and do something completely different, right? They're investing, they're buying assets, they're buying real estate, they're buying businesses, other businesses, and they're creating cash flow for themselves. But they want to, but a lot of them want to tell the clientele, hey, don't buy real estate because it's too risky. Don't don't purchase a cash flowing business, because you might lose. Give all the money to us, Wall Street, and sit around and watch your financial grass grow for 30 years. And it's just not what they're doing. Not and I again, it's evidence based, right? Uh, Insurance companies, life insurance companies, some of the best insurance companies. Um, a lot of them, if you want to just pick the top, the biggest three, right, which would be um, New York Life, Northwestern Mutual, and Mass Mutual, they had their best years in 2020, 2021, 2022. How can life insurance companies have their best years during and soon after a life threatening pandemic? They're paying out claims. People are dying. Like what you're insuring is deteriorating. You're not supposed to have good years during those times, right? It doesn't make any sense. Now there are two logical explanations for that. One, they didn't pay out the claims, which is false. These are excellent companies. They paid out the claims. Or two, that everybody rushed and bought life insurance policies because they thought they were going to die during COVID. And that doesn't the evidence doesn't really support that either, right? So how can they have their best years during that time, right? So it's things like that where I'm more interested in what these companies are doing, even municipalities, what they're doing, than what they're selling.
Yeah, I mean it makes sense. Um, I'm sure people are wondering what is the answer to that question. I think I have an idea, but why did they have their best years over that span of time?
Oh, because they buy assets. They're well diversified. They're diversified. When I say assets, I don't mean just the market. I mean real estate, businesses, things that are bringing in revenue, things that go up and appreciate. They have a lot of them buy a lot of real estate.
Right.
Real estate skyrocketing in 2020 and 2021 and 2022. They have it's just so many assets that are appreciating that their claims from their life insurance. I mean, they can pay. It's like a speed bump, and like not even a speed bump. They just it's they can just pay it and keep going, right? Because of all the other stuff that they're doing. But the average American has like just a 401k, just market based assets. And I'm not saying that's not a bad thing. I'm just saying they're not diversified amongst different asset classes, being the market, real estate, businesses.
Something you said was very interesting to me, and I guess I hadn't thought about it this way in the way that you described it. So you said that what they're telling us or what they're selling us is not what they're doing, and you said the life insurance example, and it's true. Like I'm I'm not I'm not sure what assets they directly invest in, but getting a life insurance backed commercial property loan is like we have some of those. Like that's where they lend out money on commercial real estate, and so yeah, it makes sense for them to be. I just hadn't even, I guess, thought about that side of it, but yeah, it's certainly the banks are not doing what they tell us to do. The banks are, asking us to put our money in them and save it. And if you're really lucky, you'll get a 4.5% high yield, you know, savings account.
That's at least overt, right? It's on the wall when you walked in. Like it says it clearly as day on the wall. Like we're gonna give you this rate, and then we're gonna charge this rate to somebody else, right? For the money that we're gonna loan out. You got fractional reserve banking, which is like it just creates more money into the system with the loans. But I'm not saying they're doing anything wrong. I'm saying like these companies are doing things right. It's just not what they're saying for your average American to do. So it's definitely two games, right? That even investment companies, their technical term is investment companies, but people just kind of use colloquially mutual fund companies. Um, they're investing in real estate and businesses. They're not just sitting around for 30 years to watch money grow, right? Sometimes I even get beat out in real estate deals by the very companies that I'm putting my clients' money into yesterday, right? But again, I'm not saying they're doing anything wrong. This is how you play chess, right? Um, and the biggest differentiator, the biggest thing that's going to separate somebody between a checkers game and a chess game is their attitude towards debt. If you're going to play checkers, you want to stay the hell out of debt. You want things paid off, diligently save in retirement accounts, take a small pull down rate, which is going to so you don't outlive your money, all that good stuff, right? It's a good checkers game. But if you want to play chess, you really want to get into as much debt as possible without over leveraging, without building a house of cards, right? But how you use debt's like fire. If you use it correctly, it heats your house, cooks your food. If you use it incorrectly, burns everything to the ground. So how you use debt and your attitude towards debt is one of the biggest difference between a checkers player and a chess player.
Yeah, it's a it's a piece of the puzzle that I think a lot of people really don't understand, and it's I you see things like, well, like student loans. I have a lot of friends with a lot of student loans, and they, a lot of them are like, I'm gonna pay these off as fast as I can, and I'm like, stop doing that. Stop doing that. Like, if you want to pile money into something, pile it into your investments, and let your sort of low interest uh, loans like a mortgage or a student debt, like let that just ride for now and get your investments built up. But and you're talking even on a larger scale, and it's not like banks and the insurance companies and stuff, they don't have some magical savings account that just happens to give them a much better rate of return than what we can get. They're actually investing it just like we should be doing our in our own portfolios.
It's just a matter of scale, right? So
Right.
my son plays 13U baseball, right? Travel baseball, very competitive. Uh, and but he's not on the Yankees, right? He's not on a major league team. But the fundamentals and the strategies that he uses to play 13U competitive travel baseball are the same as the major league players use. It's just a different scale. It's just different expectation, right?
Mm-hmm.
Um, but in finance, they're two totally different games, right? You can play a chess game and use the same strategies as these big corporations are using. It will just be likely on a much smaller scale. Um,
Right.
but by the end of my book, uh, people shouldn't be screaming at the moon anymore. Why do the rich keep getting richer and the poor keep getting poorer? It's
Yeah.
it's the games that they're playing. They're not playing the same games, and you can win or lose at either game. But chess is what is going to help somebody become, you know, achieve a higher level of wealth, possibly generational wealth,
Yeah.
and checkers is really you can be happy, you can live a nice life, but you in the process you're going to be making a whole lot of other chess players wealthy
Mm-hmm. Yeah. Yeah.
by saving money to bank, just buying the mutual funds, just buying the insurance policy, just buying everything they're selling you. And I'm not saying don't do that. I'm saying you if you're going to play chess, you want to do that and then do what they're doing, right? uh, One of my jokes is if you go down, I'm in Tampa, and if you go down to the boat show here in Tampa Bay and you walk up to somebody with a $25 million boat and you say to them, "Hey, how'd you afford this $25 million boat? This is awesome." They're not going to respond with, "I fully funded my 401k. I bought a well diversified mutual fund." Or any of these other what we know as checkers moves. Um, that's not going to be the answers, right? But I'm
Yeah.
not saying those things are bad. I'm just saying they're checkers.
Yeah. Yeah. Well, it's and it. You talked about the scale of it, and it's interesting that you say that. And I just literally probably a few hours ago got an email from Robinhood, the stock investing app, right? So and it says get 1% on your investment, $1 or $1 billion, and so a couple things like that struck me on that and relevant to this conversation is like, so most people probably that have a Robinhood app don't have $1 billion to invest, right? Like that's not how billionaires are investing. They're not like pulling up their phone and clicking away on Robinhood. But if you think about it, like the number of people that do use it, you could easily get a scenario where $1 billion gets invested into Robinhood and they have to pay out 1%. So 1% of, if you put $1,000 in your Robinhood account, probably not going to change your life. But 1% if you were to put $1 billion in is going to be significant. And so it's effectively free money. But then people's next question would be, well, how can they do that? How can they afford to just give away 1% of all of this? But it's because they're doing that money that gets invested. It doesn't go sit in a little like box of Apple stocks. That's not how it works. Like they do something with it. Like basically Robinhood has created another bank essentially, and that's what they're doing with that app now. So it's just, but because they can do it at scale, then you just have the ability to change, kind of everything the impact is bigger, but it doesn't mean that we can't do it in our individual investment portfolios.
Yes, it's just a matter of are you willing to use leverage? That's definitely one of the biggest things, in my opinion. You know, so and I have an example in the book where, um, you know, if you invested $1 million with our firm, and it and you got X percentage over 10 years, you know, it would do well. Let's say you got a 7% rate of return. You have $2 million after the 10 years is up. You know, using very conservative numbers here, but let's say you we took $200,000 of that million, and we bought a we have $800,000 underneath management. We take $200,000 and put it as a down payment on a $1 million property that's cash flowing, um, and that property's earning, you know, getting a 4% appreciation over those same 10 years. So now you have $800,000 working in the market. You have a property that is increasing, at this fictional four, you know, hypothetical 4% every year, and cash flowing $5,000. And if you reinvested that $5,000 back into the investment account over those 10 years, you can end up with, you know, another $1 million. It could be over $3 million, right? So, and it's just, and none of this in this hypothetical scenario was more of your money going into the concept, right? And it's just the concept to show it. It's not like, I don't want people to get hung up on the numbers. It's just more of the strategy, right? Um, and using leverage, but you know, not everybody's going to want to do that, and some people just hell bent on playing checkers. And but if you're going to play a checkers game, play a darn good checkers game. You know, make sure you're saving, make sure you got debt paid off, make sure you know, you're living within your means. If you're a chess player, your attitude is make more means to live to live in.
Yeah. Yeah, it's I think people that think about debt as a risky strategy, and so when they might hear that the chess game is not for them because they're afraid of that risk. But in a way, of course, you don't want to do anything stupid. You don't want to, you don't want to be 100% leveraged. You don't want to do things that have historically gotten people into trouble. Like, the 2008 real estate crash was because everybody was over leveraged. Like, there are things that have been shown to be a problem, but that doesn't mean that you shouldn't use leverage to grow your wealth. And it also, again, if you're saying that's risky, but is it less risky than growing your wealth really, really slowly?
The most risky thing, in my opinion, is you you get a mortgage, right? Let's say it's a $500,000 mortgage, and you have a job. Let's say your job is paying you, I don't know, $100,000, right, or $80,000, and you are risking every day you losing that job and losing the house, right? To me, that's the riskiest thing because you don't have any assets to use, put water on that fire if any problems have. In my example, you have $800,000. If there's a problem, you can use some of the money to put out the fire, right? You can, if you, let's say you don't have any renters or something like that, you have reserves to be able to handle problems that, you know, inevitably arise, right? Nothing ever goes smooth sailing all the time. But when you don't have those assets and you're just telling the bank, I make $100,000 a year, I'm going to continue working for X amount of years. So you're betting your future income on paying that mortgage off, and the bank's saying, okay, but if you screw this up, I'm taking your house. Oh my goodness, that to me that seems incredibly risky. So, and that's what people do pretty much every day. Um, but if you have the assets, you you can't lose the property. If you have the assets to just pay it off at any point in time, you just don't want to. You want the asset, the income from the income that the asset is producing to pay off that loan for you.
Yeah, yeah. I completely agree. And I mean, it's a learning these strategies, and I think your book will be a good place for people to check it out. But like learning these strategies, they're not necessarily they're not taught to us in school. They're not like readily available. Like these are the right things you should do because there's an entire industry based around us playing about around people playing checkers because they're those those big time chess players are making money off of the checker players by using their money to do what you're talking about people should do.
I tell people if you're depositing money in the bank, I'm the guy behind you ready to borrow your money out of that bank to buy something that's going to produce more income for me.
Yeah. um what do you suggest? You don't have to give all the secrets from the book, but I mean, where do you think people should start if they want to think about? Obviously, they need to educate themselves, but like, what are some moves that they might make if they want to sort of get into that checkers game, if you will, or chess game? Sorry.
It's definitely a mindset switch. That is the biggest thing. And that's the whole point of the book. It's a self discovery book more than anything else. Of course, you're going to learn tips and tricks and all that good stuff, but it's more of a self discovery book where people are going to learn whether they are a checkers player or are they a chess player, and if they are a checkers player, do they want to switch over to chess? And for some people, it'll be no, and that's absolutely fine. They don't want you to play a good checkers game. But if you are interested in switching over to chess, the mindset's got to be there because it won't be done for you. It takes a lot of diligence, a lot of patience. Starting out maybe with just a drip, not not a pour, just a small drip, but eventually the drip becomes the pour. The pour becomes like a whole open faucet, and next thing you know, you're good. And once you start that down that chess path, you'll it's not likely you'll ever want to go back to that checkers mindset.
Yeah. Yeah, it's I mean, we I'm sure I don't do all the things right in terms of playing chess, but that is my goal, is to really be, continue to grow uh, wealth that way, looking at all the different options, playing the right money games and stuff like that. It can get a bit addictive in the sense that you're like, what, why wasn't I doing this? Why isn't everybody doing this?
Isn't it crazy? Yeah, absolutely. You're like, why wasn't I doing that this the whole time? Why didn't anybody, you know, educate me on like all the different options? And, why did I just think that just putting my money into the market and letting it sit there and grow with, the market was the only way of doing it? And I'm not saying the market's bad, right? I make money putting my clients' money into the market, right? Um, but yeah, I mean, and again, evidence-based mindset, right? So let's look at the market, right? We right today we had an all-time high in the S&P 500, right? All-time high today. Jason, who do you know who became wealthy because the market hit an all-time high today? Do you know anybody? Do you know anybody that knows anybody that is now all of a sudden, because the market's at all-time high, is rolling in doke and Scrooge McDuck their way into that, into those coins? Like,
I know that those companies that are at the top of that at the top of the S&P 500 are very wealthy. But yeah, I don't know anyone personally who is you know reaping the benefits of that all time high.
but it's not a bad thing,
Yeah,
right? It's a good
yeah,
thing that the market's at an all-time high today. It's just the market can't make you, in my opinion, the market's not going to make you wealthy by
yeah.
itself. But if you're using it as reserves, as almost like collateral, right? One of my jobs as a wealth advisor is to make you look very good to a
Mm,
lender. A lender has other people's money. So you just can't say, "Oh, I want to buy a business or I want to buy real estate." They want to see they want to see statements. They want to see money to be able to know that you are a good bet, that you're going to be able to pay that loan back, um, almost no matter
yeah,
what, right? So you slap down the statements in front of them and you say, "Hey, look at how much money I have in the market," right? but I don't want to use this money. I want to use your money. I want you to go in that back vault there and take out several $100,000, $1 million, $3 million, whatever whatever it's possible for you to to get your hands on, and then buy that cash flowing asset that will repay the loan and put some money in your pocket and enjoy life, enjoy the things you want to do.
Yeah, yeah, and yeah, what you said there at the end, enjoy life, do the things you want to do. I mean, that's one of the things that I find maybe the thing I find the most rewarding about becoming a chess. I hesitate to call myself entirely a chess player because I'm still figuring some of this stuff out. But um, the I think the biggest reward it's freeing up time. It's disconnecting me from trading time for money, right? It's just finding other ways to be to have wealth grow in ways that move me away from in my case, I'm a veterinary surgeon, so move me away from the OR if I want to, move someone away from sitting at a desk, move someone away from whatever it is that job that you described earlier as not necessarily the safest thing, and just kind of create a disconnect or a buffer so that you're doing that thing because you love it, not because you have to. And so I think to me that's always the key.
Right. Exactly. Right. If you're doing what you love, it's fine. Yeah. If in I end the book with, like, if you want to be the best circus clown in the world, go right ahead. I mean, because you have the assets, you have you're not being a circus clown for money anymore. Um, and and the whole idea, even the idea of budgeting, uh, it's you can't budget your way to wealth. That's not how it works. People ask me all the time, how much do I spend on travel baseball? My daughter does competitive cheer. How much do I spend on these activities a year? I have no idea. it's not it's not a we don't budget. It's we just make more means and live within those means, but the goal is to make more means. So yeah, so every year it gets a little better and a little better, and you can do more and more things. That's the goal. Again, playing it on a scale, right? It's okay to start in little league, work your way up to high school ball, then college, then the minors. You may never get to the majors, right? But that doesn't mean you're you're not playing a good game.
Yeah, no, I agree. I think it's a I mean, I think the tools of budgeting and saving and like I said, getting money in the market, all of that contributes to it, and it's a good starting point. Like you don't, I would imagine that you don't necessarily dive into these chess strategies if you have a ton of credit card debt, right? Like that's the
No,
thing
no,
and I'm sure you would advise clients that way as well.
we we got to master
Right.
checkers
Yeah. So
first.
that's I think
We
for people listening, understanding that what we're talking about is kind of once you get past the level of checkers or where you're at that point where you understand how to live within your means, and then what you're really trying to do is as you said, increase that means, and whatever you do with it from there, that's the kind of next level of how to really grow. So um, I
yeah,
think importantly, or important for people to understand that you do have to certainly look at where you are in your phase of life and your financial literacy and freedom and all of that. But these are the ways to kind of accelerate that growth. Once you reach a point where you're comfortable.
once you have that foothold, right? Then you have to make that decision. Do you want to stay there and just do the average? But you cannot have uncommon results doing common things. People ask me all the time, like, well, don't most people do this, whatever this is? And I'm like, yeah. Do you want what most people have? Because if you want what most people have, we'll totally do this. And as long as you're not going to be mad at me 20 years ago for you not having this, then that's fine. Let's go do it. But people just follow that crowd to the slaughterhouse, and it's like, you, you, you probably want to do something different. Yeah, and it brings me to like even things like taxes. Um, and taxes is a big part of this, right? If you are playing chess, you're learning um, how to use the tax code to your favor. It's a mutually beneficial relationship between you and the government when you're playing chess. It's not, the one I feel like the most overused word is loophole. There isn't loopholes. It's just rules, and the any tax break that the government is giving a chess player is because that tax break benefits the government, not doesn't hurt the government. That's why they have the rule, is because they want you. They're incentivizing you to do something with your money. And it's a free country, right? So either you're going to do what the government wants you to do, and your taxes will be lower because of that, or you can do whatever you want to do with the money, but then the government's going to tax it harder because they need to go do what they need to do with the money, including, of course, biggest is defense, but roads, schools, bridges, everything else. Um, so how you invest your money, um, if the tax code is like a big old book on how not to pay taxes. People need to change their mindset on how they approach the tax codes in this country. It's because if you start thinking about it as a partnership with Uncle Sam, like, okay, how do I not pay you? How do I not pay a lot of taxes? And Uncle Sam's saying, okay, well, I need you to invest in businesses, right? Because if you invest in businesses, you're going to create jobs, and those jobs are going to be W-2 income, and I'm going to hammer those people. So make sure you develop as many jobs as possible, so I can tax them heavily, right? So that's the attitude towards businesses. I want you to buy a lot of real estate because I don't want to get involved with real estate. I don't want to create all these rent control, all these laws. So I want to give a lot of the real estate investors a lot of incentives to buy real estate, a lot of tax benefits. This way, they create competition amongst themselves and create a market where the rents are reasonable. Though, of course, that's that's always you know you know arguable point right now, but but you get the point, right? So having kids, you're the reason why you get a tax break for having kids is because you're creating future tax players, right? So you're increasing the tax base for the government. So everything has oil and gas. Definitely one of the bigger tax breaks. But you need to be an accredited investor for that. You need to have a lot of money. But those are the things. The tax code are incentives for you to do those things that the government wants you to do.
Yeah. Yeah. No, I agree. It is, and I think your point about it all being, a really significant mindset shift about how you think about debt, how you think about taxes, how you think about investing, how you think about any of it, and really kind of um, putting those pieces together. Freddie, let me switch gears here so I can ask you the questions that I like to ask each guest. And the first one, of course, is related to the name of the show, being Know Your Why. So, what is your why? What's driving you? What's motivating you at this point?
Generational wealth, yeah, family, having letting my kids have the freedom to do whatever they want, um, you know, and that's and not being the slave to capitalism, um, being productive and having them giving them the opportunity to do whatever they want to do. That's definitely the why. Um, but yeah, it's really and being around more.
Yeah.
Like uh, when I was a police officer, I was always begging my lieutenants to let me leave early to go, see my daughter sing Christmas carols in preschool, or get to my son's little league game on time, and granted, as long as there wasn't a major event, they would let me do that, which was super nice of them. But but I remember driving to those events, like trying to get there on time. You know, Fairfax County, a lot of traffic in the DC area, and I remember thinking, like, you know what, I wish I had a job where I can, I, I could just make it my own schedule,
Yeah.
right, and not have to work and not have to work around it, so I don't miss anything. And being able to build a business and not miss anything, I think, is my greatest accomplishment. Because I know a lot of entrepreneurs that are so neck deep into their businesses that they neglect the things that they're building their businesses for, and that is to have that time with their families. You know, Calendly basically runs my life now.
Yeah. Yeah.
I love Calendly.
It's a very helpful tool. And I mean, I guess the sentiment I I share completely. I mean, it's just a matter of what how do you want to spend your time? How do you and I think it's funny because people, I think a lot of people, this goes back to the whole mindset thing, but I think a lot of people look at it and they're like, oh, people who are in the financial industries in some way or something like that, or wealthy people or whatever, are just, they're just trying to pile up money. And it's, I like, that is not, that is never the answer that I get to this question. And we're, I think, around like 350 episodes, no one's ever like, I just want a pile of cash in a room. Like, that's not at all what it's about. It's about,
I want a pile of income.
right, it's just about time. It's about time and figuring out these strategies towards growing your wealth to create time is really what it comes down to. And it's just, I think, like, recognizing that is such a kind of empowering piece. Because I mean, the reality, this may not be true for everybody, but like for me, when I decided to sort of go all in on investing in entrepreneurship and all of that, like, I make less money than I did before. Like, on paper, I make less money than I did before, but I'm building assets that are growing over time. I also don't have to pay nearly as much taxes, so I can make less money. And I'm around for my family. Like, so it's like, I don't care that the number on my tax return at each year, like, is lower than it was, because A, I know, like, I've got more time. B, I know that's going to grow again because of what I'm doing, but it's not going to be tied directly to my time. It's going to grow because I'm making investments and doing, you know, uh, trying to play chess. And so it's just kind of, figuring those things out. And then once you figure out that the rules of that game, it really does become very addictive.
Yes, and like when people ask me, and I get this question a lot, like, well, if you have 10, $15,000, like, what should I invest in? My answer is always the same: yourself. Like, whatever is going to help you be able to earn or create more income, um, that's what you should invest in. You know, given my firm $10,000 to invest in the market, it's, I mean, we can't spin straw into gold, right? So, I would much rather people invest in themselves and develop a skill, something that's marketable, something that's going to be able to create um, income to then purchase, to then buy, then invest in the market, then take out the loan, then buy the asset, and that cash flow coming from the asset is what you use to enjoy your life. So this whole, like, system, I mean, but it's it's hard to do it on your own. It's, you need to build a team. And
Mhm.
of course, wealth advisors are part of that team. Tax advisors, good lenders, good realtors, good business brokers, all of that stuff. So it's really, um, it's a cumulative action.
Yeah, yeah, for sure it is. When people hear this and they want to reach out to you, what's the best way?
Uh, my firm is optafinancial.com. If you go to that, you can schedule an appointment. I make it pretty easy. It's on the top right hand corner of the screen when you go, and it's a complimentary consultation. Um, and you know, we our fees are very low. And the reason why we can have lower fees is because we have such a great base market that we have chosen to be um, more affordable than the standard financial planning firm. Um, so optafinancial.com, and of course, please read the book Playing the Wealth Game on Amazon, and or Barnes and Nobles. You can find it pretty much everywhere. And and write a. I'm interested to find out what people enjoy or don't enjoy about the book. So feel free to write a review, um, positive or negative. Um, and yeah, it's once you, but like we said before, once you start understanding that you are playing a game and do you want to play a different game, as you said, it gets addicting. I would use the word liberating.
Yeah. No, that is a better.
It's like I want more of this because this is what people want. People want freedom. They want time. They want to be able to just go to their kids' baseball games and cheerleading competitions and not have to worry about stuff and be able to afford things, even things that are overpriced. You know, $15 for a cheeseburger at some of these baseball concession stands are. I'm like, this is ridiculous, but I buy the cheeseburger. It doesn't stop me from buying the cheeseburger. I still recognize that it's ridiculous for a cheeseburger, but it doesn't stop me because the income is there and it's going to be there tomorrow.
No, yeah, addicting is probably not the right word, but it is. It just look at your it makes you look at your life from just like a very different perspective about how it looks and how it can look, and kind of how to figure out ways how to make those pieces continue to fit together. So well, Freddie, I appreciate you coming on the show today. I really appreciate you taking the time out and sharing this with us. We will definitely have all your contact information, everything like that, in the show notes, so people can reach out and can find the book. And I would, as a pitch for you, don't leave a negative review. If you don't like something, go ahead and email him. Don't mess it up for him. That's just it's I think that it's an unnecessary thing. If someone has we do that with like Airbnbs. If there's a problem with an Airbnb, I'm not going to leave you a negative review. I'm going to tell you there was a problem with the Airbnb, and I'll leave you no review. So because people are trying to trying to make a living, trying to sell a book, whatever you want to say. But I think it's unnecessary to publicly do that to someone. So but yeah, thank you for coming on the show, and I appreciate you being on.
Thanks, Jason. Thanks for having me.
And folks listening, please go ahead and like, rate, and review, and I'll take whatever review you want. I actually think I like the idea of feedback on the show, but it helps us get more great guests. So thank you all for listening, and have a good rest of your day.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?